Hello, my name is Eddie Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited. And here is your weekly technical analysis of Paris rapeseed, Winnipeg canola and Malaysian palm oil. Paris rapeseed. In late June, the market broke up through and closed over a short-term upper wedge trend line and made a fresh onslaught higher, reaching the primary and secondary targets for this small descending expanding wedge pattern and rising in early July to make new highs not seen since July 2020, well, 2022 I think we're probably in that case. Yeah, July 2023. And reaching the congestion seen in September 2012 between 513 and 3/4 to 519.5. Once there, prices again fell away, but this time only down to a little short of the 2013 high and as far down as the rising purple highlighted medium moving average, currently 475 and 3/4, reached 3 weeks ago. We then saw a rise the same week, peaking at the congestion at 504 and 3/4 and just over the neckline of the June to October 2023 head and shoulders top, currently 497.5. It's since fallen away, a small bear flag last week, below the purple medium moving average and under the newly, or I should say medium moving average, and under the newly drawn last week dark blue highlighted lower bull channel line, currently at 468 of the June to date based very wide bull channel. Now, I did say this last week and I quote, "This, I stress, may not be the final pattern here, but is the pattern that is currently dominant and the one we have to deal with, and I would thus treat the bull channel as the key current feature with a neckline acting like a medium moving line, let me try that again, acting like a median line if you will, until something else develops," end of quote. Apologies for that. This week I had drawn a July based bearish shift pitchfork highlighted in bright red on my daily chart. I've drawn this bearish pitchfork early and I'm quite happy to retire it if it becomes troublesome. But for now I wanted to show the current bearish angle of attack of this market. Right now prices are just above the combination of the middle time, currently at 468.25, the dark blue lower bull channel line and the June 2021 low at 468 3/4. There is one other feature I would like to highlight, and that is a new pattern that has revealed itself. It is a late April to date head and shoulders top, the dark blue lower channel line as its neckline. So far it's not revealed it if it is a head and shoulders top or a continuation pattern, so watch the neckline and the action around it for further details. So for now I do favour a head and shoulders top action. Winnipeg canola. There is a lot going on here, as you can easily see, and I'll do my best to interpret it. Towards the end of May, the market moved up, breaking through the gold highlighted long moving average, currently at 645.80, but soon after running out of steam on the upside from the effort of doing so. However, in the process, the month of May became a monthly key reversal up, a longer term bullish pattern that I will suspect come to influence actions in this market, if not now then in the future. However, June was not going to see any immediate resultant move higher, and instead prices dropped, making lows not seen since the horn bottom of February. The fall was finally stifled by a 2-day pipe bottom made at the end of June, based on the May 2023 low at 611.10, and prices have then zigzagged since higher throughout July. The initial zig was up to the combination of the gold highlighted long moving average, the June 2021 low at 655.90. The subsequent zag was down again to just over the May 2023 low, and the subsequent zig back up was towards the May highs, just over the lesser Fibonacci line at 679 even. The latest zag lower has been extended and has seen prices rip down through all the moving average, which are far too close together for my liking, and down through the 2021 low at 629.5 and the continuation of the neckline for the April to June head and shoulders continuation pattern, currently at 625.90. All this toing and froing created a wideish bull channel since late June, which I highlighted in bright red on my daily chart. Now I originally liked the look of this bright red bull channel, but this didn't last. You see, I laid out some points that changed this outlook. I said last week, and I quote, The first and most obvious is the previously mentioned concentration of moving averages, all within a small area, specifically between now 639.5 and 645.80. They have not acted as supports, and at most the gold highlighted long moving average has acted as a resistance back at the start of July. Personally, I suspect that these moving averages may be more of a nuisance than anything else right now, but we shall see. End of quote. Looking at them this week, and I do see a constructive move in operation. We have earlier this week formed a bearish bow tie formation of the green short medium moving average, currently 643.80, the mauve medium moving average, currently 645.40, and the gold long moving average, currently 645.80. It is early on in its construction, but right now it looks bearish, though I am watching the medium and long moving average for any upticks. The only other feature about them is that they have entered the bow tie formation in the wrong order, though they are looking like exiting in the right order. Now, part of the bow tie formation is what it does at the beginning, but also what it does some 15 to 20 sessions after formation. There's usually a period of volatility and sometimes a further move in the direction of the bow tie. Thus watch out for such a period between the 28th of August and the 4th of September. Finally, I've drawn two bearish pitchforks for the late May to late July action. This is a bit preemptive on my part, but I feel obliged to show these to you. Thus, the steeper bearish Andrews pitchfork is highlighted in dark blue, and the shallower bearish shift pitchfork is highlighted in purple. At the moment, the market is a little above the middle time, currently at 602.80 of the dark blue bearish Andrews pitchfork, near the May 2023 low at 611.10. Bursa Malaysia crude palm oil. It has been months, many months indeed, since we had the key break higher over the bright red highlighted upper time, currently at 37.90, with the August and November 2022 bearish shift pitchfork. Yet I have still kept this pitchfork on my daily chart and also highlighted. Why have I done this? Well, looking back, it was because during May the market hesitated and built a base on its very thoroughly broken upper time, helped at the time by the 50% Fibonacci line of the May 2023 to July 2024 move at 38.75, as well as the then long moving average, which is currently at 39.25, plus the significant May 2023 to August 2024 uptrend, currently at 39.74. The move back up started as a counter to the monthly key reversal down we saw in April, creating a small reverse head and shoulders bottom over May with a neckline extension, currently at 39.45 in early July. In early July, actually, prices did rise, but soon fell away, leaving, if you include the changeover gap, an island top in the first week of July. However, the decline was stymied for a while, but this week, right at the start of this week, we saw prices take a flyer on the downside. Down through the mid-May to early August uptrend, there was also a lower bull channel line, currently at 39.11, highlighted on my daily chart in dark blue, and have moved down to, yes, you've guessed it, the same old bright red highlighted upper time mentioned right at the start of this commentary. For the moment, prices are holding close to it, but I have concerns for how long it may do so. You see, we can look at the whole action since early April as potentially one very large bearish halfway hesitation. If that is the case, then the potential on the downside is well below the current bottom of my daily chart, down in the 34.20 zone. Quite a large move. Hence, I have drawn an early April, early July bearish Andrews pitchfork on my daily chart to try and gauge the bearish angle of attack. It's early, but there you go. At the moment, the market is a little above the declining middle time, currently at 37.02. Now, one final point, and it's contrary point in some ways, but a point I've been stressing now for 20 weeks. Gave my thoughts back then on what was going on, and thus, I quote, "So what now? Well, for this I went to my standby on such occasions, the longer term monthly charts. And there was one clear standout level that needed to be watched, and that was the November 2022 high at 44.08. This is a key level on the top side, because if it is broken, properly broken, then there are very significant potentials topside. Similarly, if it holds in that area, then there are significant potentials on the downside. So watch to see if prices reach up to the 44.08 area, and then what prices do at that level." End of quote. For the moment, I would still consider monitoring the 4408 level, as this is a longer term play, and we are moving away from it on the downside, hence there is significance. Thank you for listening. This weekly broadcast gives the essential market patterns and consequences. Please be aware of the risk disclaimer posted both at the front and at the back of this broadcast. Copyright is Eddie Tofpik and ADM Investor Service International Limited. And here comes the final important bit.